Why do some of our buyers buy in mining towns? Well, are mining towns risky? We've been told they're high-risk areas because mines might shut down, and then if the mines shut down, you're not going to have anyone there to tenant that property, and growth might go backwards. That is true, but there's risk with everything. We have plenty of buyers at DDP, and once again, that's why we cater for different types of buyers and properties, because it suits a certain type of buyer profile. So we've got buyers that want to pay a cheap purchase price, and I'm talking about properties in regional areas, for example, for $250,000, bringing rents of excess of, say, $500 a week. So that's a $250,000 property with $500 a week in rent. So the yields can be even 10-11% in return. What's the risk or what's the catch? Well, the mines could shut down and then you may lose the tenant. But this is what I have seen in these areas. As much as it's an opinion the mines have shut down, I look at some of the areas in Queensland, in Gladstone, Rockhampton, about 15 years ago, when people got into those mining areas, and then they sold out because there was changes in mining demand and supply based on Australian mining companies and overseas demand. And people then freaked out and sold those properties. And now I look at Rockhampton and Gladstone, property prices have been significant in those areas, which comes down to my fundamental principle that property is a long-term minimum 10-year hold. Had you held that asset for the long-term hold, the people, in my view, would have regretted selling those properties along the Queensland coast in Rockhampton, Gladstone. So once again, we at DDP have buyers that buy properties for $250,000 with rent of $500 a week. And some of our buyers are even cash buyers because they'd rather maybe the money sitting in their savings account or their self-managed super fund or superannuation account want to attract 10% returns rather than that fund sitting in the bank, and they go and buy these mining properties. Or it might even suit a different type of buyer rather than buy a very expensive dual income or granny flat type of property, would rather break down the purchase price and split it into a few cheaper properties in these mining town areas to attract higher rent. But the other part I've noticed, even with coal mining, I know there's a lot of against coal mining and mines shutting down, but coal is still in demand and there is continuously movement in the coal mining area. And the other areas that I've noticed when I look at mining towns is some of these mines that are being converted or shut down, they're actually being converted into renewable energy type of mining, so that the area is changing and the demand for that type of product or service is changing. So I definitely wouldn't say no to mining town. It comes down to your profile, your risk profile, and that's what at DDP we do, is we strategize a solution that meets your criteria.